Good afternoon. I'm Mike Graham. I'm the president of Midwestern Securities. And joining me today for this episode of Banking on Growth is my good friend, Chris Gavin. Chris is the president of Midwest Bank. Midwest Bank is a bank in Western Illinois that has about 650 million in deposits and serves customers in 10 different counties. Midwest Bank is what I'd consider a progressive community bank that has been very successful in the insurance business and has separate divisions for wealth management, mortgages, and card services. Chris is the president and CEO and has been a banker since 1982, and starting as a commercial lender and also has vast agricultural lending experience. So Chris, you've got a lot of experience. You've got a progressive what's it take to win type of attitude. We're thankful to have you as a partner of Midwestern Securities, and I'm thankful to have you as a friend and colleague as well. So thank you for being with us today, Chris.
Thank you. I'm glad to be here.
It'll be great. Well, let's jump right into it. First question, Chris. Why did you start your wealth management division?
We had a trust department in this bank for years, and before I got here, they had started a retail investments program probably 10 years before I joined the bank. I joined the bank in 1997, and I had been involved with an operation in my previous bank that I had been at and saw what it could do and saw that it could be successful. So when I got here, that's a big thing for me to try to get it started up again. They had been through several different reps over that period of time, and I think it was probably shut down for 3 or 4 years before by the time I arrived.
So do you remember why it was shut down, or what the excuse was, or why it was shuttered? What just wasn't working there?
I don't know for sure. We can probably talk about this later, but I think part of it is just their broker dealer and the support they were getting from their broker dealer. Just the model. I think so many banks, have failed to make it work because they have not had the support from their broker dealer, or maybe they didn't make the commitment, all the way up to the board level to have a program. And then the other side is that I think they were very traditional. They'd had this trust department forever. So I like a lot of the bankers and the directors, and they knew the trust side. They'd been around it forever. And I'm just guessing that the whole retail side, never got the support it needed from either the bank or the broker dealer.
Okay. So it didn't have the support at the bank or the broker dealer. It floundered. They decided to shut it down. What were the things you were hoping you would get out of it by starting it back up?
Well, I think it's great to have options for your customers. We are community bankers. We hope we're the trusted source of financial services, and I mean it's great to be able to offer these services and become a one-stop shop sometimes. But just having the opportunity to expand relationships. We know that our customers were using these services and they were going to our competition. Back then, it was before a lot of them were getting into banking, but more and more some of our competition on the investment side is also offering banking products. So, yeah, I mean, I think that it's just been. I think the main goal is to help continue to build the value of our franchise and build our customer base relationships and things like that.
Gotcha. Yeah, that's well said. So your customers needed it. They should get it from you instead of a competitor. Lock your competitors out and strengthen those relationships, and deeper the relationship and monetize more of the relationship. I know a lot of our competitors give away certain lines of business so they can get another line of business. Somebody might be in the 401k business and they're giving away the banking business, for example. So to lock out some competitors, to deepen the relationship, and of course, hopefully we deepen those relationships, it has the positive financial impact as well. So you restarted it, and then you were with a big broker dealer, a publicly traded broker dealer, or was it two, Chris? Was it two at that point? Did you change broker dealers midstream, or was it just big?
No, we were with the same broker dealer, and it was the same broker dealer that the bank had previously. So we restarted the program with that broker dealer, national brand, a respected national brand, and I didn't know any different when we restarted that program. So, but it just, you're on your own, and Mike, we've talked about this before. As president and CEO of a bank, you have to wear a lot of hats, and this was another hat that I had to wear, and I had to figure out how to get this program started, how to get people hired, how to make sure that it was going to be successful, and so it's just very hard to do. It takes a lot of people, a lot of hands on the wheel, and I think. That's why I think I said earlier, I think a lot of these fail because they don't get that support. There certainly are exceptions to where you've got an extremely talented individual who can get a program launched without a lot of support, but I would say that's pretty rare. You also might have a situation where, somebody came across the street that had a book of business and joined the bank operation, but I also think that's pretty rare. Obviously, non-competes come into play there. So, yeah, I think it's just that was what we ran into, and it took us a little while after going through. I think we went through 4 reps with our previous broker dealer before we said, hey, this isn't working and we need to do something different. If you get up in the morning and do the same thing, you're going to get the same result. Well, it took me a while to figure that out, I guess. But yeah, we didn't give up, though. I mean, I think that's the main thing, is that we didn't give up. We were kind of bound and determined to try to make sure that it was going to be successful. And we just hadn't found the right solution.
Yeah. So important. Just never give up. A lot of times bankers will give up, and we tell them that you wouldn't stop making loans if you didn't have the right loan officer the first time or the second time. You'd keep waiting. You'd keep trying to identify the talent and train the right people, that you'd eventually get the right people in the seats. When I went to college, the one piece of advice that I remember my dad telling me is just don't skip class, right? Just keep showing up. Keep showing up. You'll eventually get it. But if you stop showing up, you're not going to pick up anything. You're not going to pass. You're not going to be successful. So don't quit. What's the level of support you got from the prior broker dealer? How many times were they in your bank over the course of however many years you worked with them? 0 times. Okay.
Yeah, zero times. I think we had a couple different reps over that time frame, either 2 or 3, and I never saw I never met any one of them in person. They were never here visiting us. It was all over the phone, and that was before I couldn't even tell you what they looked like. That was before Zoom calls, right? So it was just like, it was telephone. And again, it's a good company, good reputable company, and good people, but their model was, in my mind, it didn't work in some cases, and with ours being one of them.
So no visits in person throughout the entire contract, just is indicative of a lack of commitment or support or direction to what needs to happen in the program for it to be successful. What did they do? Did they do anything to help you recruit and build the team or train your team, Chris?
No, well, they didn't do much. I mean, they didn't, it was our responsibility to find the people to fill the need. They may have had some leads that they had generated, but I know that we never, everybody that we hired, we found on our own, one way or another. So I wouldn't say, it's been a while ago now, so I don't remember, if they did provide some sort of help, but certainly, whether it's a loan officer or whether it is an investment rep, we like to find people that have some kind of connection to the community. It doesn't have to be somebody that's currently living here, but maybe somebody that's had a connection in the past, but somebody that has that wants to make Monmouth or one of our other locations, that wants to kind of make it their home. And so I think that's one of the things that we look for. I think the company we were working with would maybe bring us somebody, get us a lead for somebody that might be out of state, or at least out of our area, and that's always really tough. I mean, it's really tough finding somebody that's got talent to move into it. So yeah, so we've had some stops and starts, but I would say that everything that the people that we have in our program now are kind of homegrown.
Yeah, we found that to be the best too. Find somebody who has a connection to the community, but fits your culture and our culture, is honest, willing to work hard, trainable. That's when we have the highest success. Now we've had success where we bring in outside advisors as well, but it's certainly something to having that local connection. And that's one of the things we talk with our bank partners about. Who would we love to bring back to your hometown? Whose grandson, granddaughter, niece, nephew wants to come back? They've gone to the big city, they're ready to come back. Let's reach out to them, because if we can take these core ingredients, Midwestern Securities is capable of, is excited about, and does train those great individuals to make them successful advisors inside of those community banks. That idea that you mentioned earlier, about finding that rep superstar that comes in and just build a program around, often what we've seen that work sometimes, but it's usually when that rep's ready to retire, or when they're ready to untangle that program, if there hasn't been sufficient bank leadership from a broker dealer that's partnered with the community bank, helping build the program around what's best for the community bank, oftentimes we've found that those arrangements have been tilted in favor of the superstar rep, because the bank leadership has been hands off, and so the rep is out to negotiate on their own with the broker dealer, and then the community bank typically doesn't have the resource for negotiating compensation of that rep. All of those things are things that we think are important in a broker dealer relationship, that the broker dealer and the bank have a kind of peer-to-peer relationship where we're providing what we think are best ideas and guidance to build the program for the bank. And if we do that, it's great for the reps, great for the clients, great for the community, versus the programs that just go out and pick up a superstar and say, hey, do this. That's what you're a financial advisor. I'm not going to tell you how to run the division, when in reality, the bank president does, or the bank leadership certainly does need to have more input into the structure, input into the how this contributes to the bottom line of the bank, and the vision of where the bank wants to go, which you've always done. And you've talked about fee income in a box throughout the years with your bank. Will you comment on what that means to you, fee income in a box?
Well, we are so we have a little different strategy than the average community bank, I'd say, in that we've been trying to build a more of a financial services holding company, and we actually are taking that. We're formalizing that with the regulators and taking that to trying to take that to the next level. But we started with insurance and trust. We had trust. We bought insurance agency in 1998. So we had been successful in launching that. We bought an existing agency, and it was we were able to make that profitable from the start. And it didn't grow at first, but it was a good source of income for us. And so non-interest income or fee income in a box is the same thing. So when we joined MSTC and our relationship started, we found the partner we were looking for in terms of helping us develop our program. So that was the next part of our the non-interest fee income in a box. But also what I've noticed was that while we already had insurance, I noticed that MSTC was they were building insurance into their platform and being able to offer life annuity products in addition to traditional brokerage products. So I thought, wow, that's a great idea. We already had gone down that road because we already had our own insurance company. But I thought, gosh, if we hadn't had that, immediately we have another way of developing that relationship with the customer, and another way to develop to monetize that, as you said, Mike, and produce some additional income. So and I think that it's important that people understand that if you build this culture of financial services, because as bankers, we didn't know it very well. We didn't have the same culture. We have been order takers all our lives, good customer service, but it usually only came about by, people walking in the door. So, but if you're successful in, building at one time with insurance or with wealth management, that you can replicate that. You learn a lot, and we all learn from each other. I know, our insurance people and our wealth management people and the bank people, we've worked hard to integrate and make sure everybody understands what everybody else is doing. So yes, I think, we have been trying to build 4 pillars of non-interest income, with insurance and wealth management being the 2 biggest pieces of that. We're also working on building out the card services, and we're also looking at a mortgage division, although that business is really tough right now. But yes, I was just very impressed when I saw some of the things that, and it's not just the insurance, it was the 401k, and it was your programs for nonprofits. And so that's where I don't know who came up with it, but that's where it came up with the fee income, or the non-interest income in a box idea came about. So as a community bank, if you want a good partner to try to generate some non-interest income, then MSTC is a great place to start.
Yeah, thank you. What's the benefit to working with if you could contrast maybe a publicly traded broker dealer like you had before, or a firm like Midwestern Securities?
So I think the biggest thing is that the large broker dealers, again, we already talked about the fact that they weren't very hands-on and we never saw them. But I think that a smaller broker dealer is a lot more vested in the program, and they don't want anybody to fail. And so if the people don't fail, then the programs don't fail. So there's so much development with the people. So I think in terms of the initial training and getting them through the tests for the people starting from scratch, or the support from to an experienced broker that they get, that there's if you can't make it with MSTC as an investment rep, you're not going to make it anywhere, because from what I've seen, and not just, so I worked with 3 different ones in my career, 2 at the prior bank I was at, and 1 other since being with Midwest. So, I think that, that's the big difference is just the support of the program. And it's all around that person. And there's other things in terms of, cross-sell training and just being hands-on and getting to know our people. One of the things that's really helped us too is that, Midwestern's helped build credibility with our board and our officers, as they get to know who the people are behind the company, which we've had the opportunity over the years to get to know the people, that just builds credibility. And that's another huge difference. If you don't have the credibility, you can't really build a program. And so having the people that are vested in the program and to be able to interact with them directly has been a big plus.
Yeah, that's good. I think the community institutions, whether it's a community bank or a community-based broker-dealer, have the advantage of being closer to the customer. And so we can hear what's really important, and we can be more nimble and create processes and policies and solutions that can benefit the clients quicker, being close to the customer versus dealing with a ivory tower type of bank president versus a bank president like you, who's been in the trenches, and your office is off the lobby. Clients can see you and interact with you. It's the same sort of value add I would think of a community-based broker dealer versus the giants out there. Let's shift gears a little bit, Chris. There's a similar business line, right? The corporate trustee services. We're managing assets often, we're managing relationships, working in some sort of fiduciary capacity on fee-based business or trust. A lot of banks have history with their trust services and aren't operating them profitably. Would you share your experience operating a trust department and where you think the future of that business is going?
Yeah. So, when I got here, we had the trust department. We had no idea, first of all, whether we were making money or losing money. And we just didn't have the accounting systems in place. It was just there, and we didn't know what we were doing really. So we started to, kind of put some management systems in place on that. But, with the previous broker dealer, we had no way of trying to put everything together. So the big thing that changed with trust for us is when we started our partnership with MSTC, we saw the ability to bring the trust and retail side together under a wealth management umbrella. So that was a big focus of what we were trying to do, for a lot of different reasons. We didn't need to have 2 different departments in the bank competing for business. That wasn't gonna work. And I've seen that happen at other institutions. So we didn't need that. We also, it's the whole overhead issue. You got so many, you're in a smaller company. You don't have a tremendous amount of people that you can, that can specialize. So you have to be able to use your human resources efficiently. And I think bringing things together helped us share resources between the two areas. And so that has been a big job, right? It's been, it's not an easy thing to do, to bring that together, because you've just got people that have been doing the same thing for a long time. Like so many other times when we try to do these things, but it's definitely the way to go. we just took the final step recently in the way our management of our wealth management is set up now, that it's totally, I would say, totally integrated. It's made a huge difference. We are, from there a lot of different ways, but financially it's been much better. I mean, we're now much more profitable than we used to be, but everybody's working together. And I think the really neat thing is when somebody walks in the door, once we understand what the customer needs, we put them where they need to go. I mean, we lead them in the direction they need to go. And so we can do what's best for the customer. So it's all very customer focused, customer centric of what they need from us on wealth management. If they don't need any type of fiduciary services, then, or they don't have anything unusual as far as assets that they're wanting for us to manage, then we always bring them right to the MSDC platform. If we have other situations, of course, always if we have a fiduciary service that we're providing them, they go onto our trust platform. The final thing, I think we've brought we took the final step, I think, in terms of management and structure, but the next step for us is to try to figure out on the platform to be more successful and to bring everything onto one platform for more efficiency with accounting and safekeeping and everything that we have to do. So that's our next goal. And I think if we can figure that out, I think that we've got something that's pretty special.
I agree. I think it is pretty special, and we've been working transparently as partners, not as just contractual relationship or as a vendor employer type of relationship. We've been working as partners trying to solve this and identifying some of the challenges in the corporate trustee world of custody, technology, human resources. Yeah, and then once you have those things, the word that you've said a couple of times, integrating throughout the rest of the bank. So we're working with you, and we're all trying to solve those issues so that our bank partners can be more profitable, more compliant, have more robust wealth management / trust offerings in their community. It's an opportunity, I think, for improvement on a lot of areas that you touched on. Thank you very much for that. Couple other quick questions, Chris, and then we'll wrap up for this session. But so you've been around the banking world since 1982. You've seen all types of different economic environments, and you've seen history rhyme, right? As the saying goes, it may not repeat, but it often rhymes. Low interest rates, high interest rates. What are some challenges your bank has faced, and how has the wealth management division played into those positively or negatively?
Well, it's been great. We like you said, we've been through all different environments, but during the low income environment, we struggled. Nobody wanted to buy a CD at 0.35% or whatever. So, it was very hard for us to really put together any type of portfolio for our customers. It was just on the bank side anyway, we couldn't really put together a ladder of CDs for them that made any sense. So, we had a lot of people during the time of low interest rates that, it's a great opportunity. If you have the wealth management division, it's a great opportunity to get them started during the low rate and environment. And so we did that. I mean, we built a lot of our customer base during that time frame, and actually kind of felt like we might be in this environment even longer. Certainly we thought that we were being told that by the Fed and our people that we listen to on the economy, that this might last for a long time. Well, I think obviously the pandemic changed changed all that. And with all the stimulus from the pandemic, it started this new environment that we're in with the high inflation and the need for the Fed to raise interest rates. So, wow, I mean, just the last, I guess, the last 60 days has been kind of a wild ride. Our wealth management has played an important role as we've made our way and navigated our way through this cycle, whatever. So we actually had just this morning, we had a wealth management trust committee meeting, and we have had a ton of referrals from our personal bankers / customer service people to wealth management on the CD side, and we've been building portfolios of CDs for some of our customers. We certainly have, we try to retain as many of those deposits on our books as we can. For a while we had so much excess in terms of deposits and liquidity because of all the stimulus that we were looking to place some money, to place some money outside the bank. It was just like, it was very dramatic. Our bank grew $125 million over a period of 18 months, and it was very difficult to manage. So, and boy, things changed pretty quickly. And now we're in a completely different situation where deposits are very hard to come by. So we have worked very closely together, I would just say, in terms of what the bank's needs are, in terms of its liquidity, what the customer's needs are. But here's a really neat thing that's just starting to happen. So if somebody's got a lot of money and they want to keep, obviously they want to keep $250,000 of maximum amount in one institution for FDIC insurance purposes. So what we're seeing now is we're getting the opportunity to put together, for those CD investors, to put together CD portfolios. And this money's not coming out of our bank, it's coming from other banks. So we're not robbing our deposit base to do this, but we're forming these relationships, and we've done quite a few of these. And we have a new customer service / teller person up in one of our rural locations, or rural banks. She's fairly new to the bank, and I think I heard this morning she has made like 6 referrals in the last 30 days. But so yeah, I mean, it's you have to use all the tools that you have, right? And I'm very, so MSTC and our whole our program that we have, what the wealth management program we have, has been a tool that we've used in both environments. And we're, without that, it's a pretty sinking feeling when you don't have any options for your customer. There's nothing you can do, and you feel helpless, and you see that money walk out the door. When you lose those relationships, you ain't going to get them back. So you're not going to get them back. I mean, it's unlikely you're going to get them back. So, sometimes it's not exactly what you're wanting to have, but it's much better to have an option and keep that relationship than it is to see them leave.
Yeah, really, really important. So you've got to get that message throughout the institution, right? You got to get the message to the people closest to the customers, new accounts people, tellers. How do you do that? How do you do that well?
It's taken, it takes a lot of time. I mentioned earlier, and part of it's been some training that that MSTC's helped us do. But it's building that, that word is used too much, but it's just building that kind of culture. And so, but we finally are now, and Mike, we've talked about this many times, but it's taken a while, but we're getting there. And, we've made some mistakes along the way. I'd be glad to help somebody not make the same mistakes we've made, but we're finally getting there to where, there's just total, there's a commitment to our program. There's the integration. We have a lot more training. We put our training room in a couple of years ago, and it's really just gotten off the ground starting last year, but we have had a lot of in-person training with our staff. So they know what our wealth management people do now very well, and they know what we're trying to do. And a lot of internal communication all the time via email, newsletters, and a referral program. And one thing that we had done poorly before was it was just difficult for somebody to make a referral and for us to track it. Well, we use our intranet and built an easy way for a person to point and click and make a referral. And it can happen instantly while they're talking to somebody. So, and that helps us track them. And so, we've tried to reduce any type of barrier there might be for somebody to make a referral. So it's a lot of different things, and it takes time, but I think we've got a long ways to go too. I mean, we've come a long way, but I mean, there's still a lot more things that we can do. So
if you had a crystal ball, Chris, you can pick the date, 5 years out, 10 years out. What's the future of wealth management look like inside of your bank? And you can measure that however you'd want: assets, revenue, team, integration, whatever's important to you.
So we'd have, let's go 5 years from now, we'd have one platform to work off of that just made us more efficient. We would have another rep for sure. We have two now. We'd have at our third rep. We would. So we have about 320 million under management between the trust and the retail investment side. I'd like to see that be at 500,000 to $500 million. Did I say $500 million? So 500 million in assets under management, 3 reps, an integrated system. And that's if we aren't able to partner with anybody else. We've had success on the insurance side, as you know, Mike. We've had success of doing some acquisitions, and it's been a really good way to grow. So you build this platform, and it's there's 2 ways you could have organic growth, or you could go out and add partners. So I think that if we were just to be a standalone, I'd say 5 years, we'd want to be at 500 million with 3 reps and have a little better platform to work off of.
Do you have a handle on what sort of percent of the bank's net that would be driving at that point? Have you looked at it from that perspective, Chris?
I have not. We are tracking the performance of our whole, for the division. We have a separate division on our general ledger. I think so. Somewhere between 5 and 10% of our net revenue would be coming from the wealth management division, I would say, and then insurance would provide another probably 10%. So we would be getting, I would say, 15% of our net revenue would be coming from those 2 divisions. But with that said, I would also, I can't. So I mentioned earlier, this is kind of a new buzzword, but because of COVID, because of all of the fraud, because of all the untrust that's out there, in the world, and the scams and stuff. So community banks are becoming, or have been always, whatever, the trusted source for financial services. So we certainly measure the profitability of each of those individual divisions or companies, but it's also important that you build these relationships and you can take people through the stages of their life, with different services that you offer. So, I just think it's I think it's going to get, again, I think we're excited because I think this is, we're going to, as community banks, you got to think where can you succeed? And I think we have to be honest that we see the consumer lending side and consumer lending all together. In terms of mortgages and car loans and things where everything's going to the phone. And you see other areas where it's going to be harder for us to compete, but nobody can service our customer any better than we can. And so it's still about those relationships. And if you have a platform to provide these services to those relationships, I think it's a place where we can win and continue to provide real value and provide real value to our customers, but also to our communities, by staying relevant in this whole business.
I think that's a great summary. That's a great way to wrap up here, Chris. Thank you again for the partnership, the friendship, and your time today, sharing your experience and wisdom with your peers that are watching this podcast.
Glad to do it.
Thank you, Chris.